Hi everyone, welcome to Sunday Stock Talk with Rich. I'm gonna get started in just a few. Hi Joe, can you guys hear me okay? Let me know if there's any audio issues, hopefully not. And then what I wanna talk about today was I wanna talk about, first of all, futures, where we are right now, what's the plan. I also want to talk about some chart requests, and I want to share some insights into 2021 and some good habits, what we need to do in order to make 2021 successful from a trading perspective. Okay. So the first thing is, like always, every time you guys come on the Sunday Stock Talk, I say the same thing about futures. We have rookie traders that buy the breakout. So this was last week's range. Here was the low, here was the high. Immediately as the market opened, we had the rookies chasing the breakouts again because of their FOMO. And they have been punished yet again for this, right? So we have that full reversal, and now we're settling back into the range, right? So I keep warning everyone, the risk to reward and the odds are not in your favor to chase breakouts. It's not. Okay. And I spoke yesterday. I spoke last week and I spoke today about trading the reversal. And one of the concepts that I talked about when it comes to trading futures is shorting these breakouts on the previous week's high with a stop either above the 10% or the 272. So these can be safe areas to actually short and look to punish new traders that keep buying breakouts for some reason. Okay, well, they don't know better. So, it's not really their fault. So now what's next is, now we're just going to move my anchor point up to that high. And now I'm just going to play to these Fibonacci's to see what's next. We see that the 50% is lining up with some major areas of support from last week. We had a nice double bottom. So I really don't expect this to break if the bulls are going to continue this uptrend. If they do break this 50%, then I would expect there to be some selling because there is a lot of stop losses here, and we can clearly see them in all these wicks. Okay, so that's futures. Let's see what happens overnight. But don't be one of those people that buy these breakouts and expect that the market is going to go up 150 points because you want to get rich overnight. Don't be that person. Okay, we've all been there before. So it's 2021 is a new year. Let's do it right this year. Okay, so I have the request here. And one more thing that I want to talk about quickly is what it really takes to succeed in trading. Okay, so I'm going to pull up my data from my 15-minute inside bar system. So this is all the trades for the year for the 15-minute inside bar system on SPY. Okay, so you can use SPY, you can use options, you can use futures, whatever. But in reality, when it comes to trading, you're going to trade between 200 to 300 times a year if you're a day trader. So with that logic, why would you want to risk all of your money on one single trade? There's so many traders, right, that I work with that the reason they are not successful is because of their risk management, right? So if you're going to take 300 trades in the year, you need to have your risk disciplined. It needs to be between 1% to 2% of your account, because you don't know which ones are going to be the winners. You don't know which ones are going to be the losers. You have, in this particular year, 2020, there was a 61% win rate. So you have 61% chance. That's not absolute, right? So make sure in 2021, you protect your capital. So if you have $10,000, like in this example here with the opening account, then your risk should be between $100 to $200 per trade, and that's it. And I want you guys to look at trading in the context of, I'm going to take 200 or 300 trades in the year. So I can't get attached to any trade. I can't get married to any trade. I need to just trade the odds, and I need to trade for risk to reward. Okay. So that's all I'm going to say about that. So now let's go into the stock chart requests, and then I'm going to show you guys my watch list for next week and some of the open swing trades that I have. So actually, let's start off with the open swing trades that I have right now. and then we will look at some of the setups for next week. So I'm going to start off with Netflix. So I'm in Netflix, and let's draw up this chart together so that you guys can see how I do the technical analysis, right? So if we just look, if we zoom out on Netflix, we go to the weekly, right? What do we see? Well, we see that we're starting to make this kind of box pattern here. We had a double top, right? But that double top is in danger of being squeezed because it didn't get much momentum down. Instead, it crashed into support, and now support has held. So the setup that I did on Netflix was I just took the break above this inside bar here with the stop down here, and I'm up a little bit. So we're going to see how next week goes. So really just playing in this box here, right? And looking for a break. I'm looking for a break to the upside. So that's Netflix. Johnson & Johnson is doing that. That's one of my most profitable trades that I'm currently still swinging right now. So let me get rid of that. So it's the same concept I did with Johnson & Johnson. We had this double top, this flag, whatever you want to call it, and we had a nice inside bar. So I took the break above this bar, and I'm up more than one times my risk right now. So just holding on to that to see what's going to happen. And then Visa, same pattern as Johnson & Johnson. I took the same setup here. But this one, we had a hammer before, so that still gave me confidence in staying in the trade. So Visa has been chopping around, so that's why I was really excited to take this breakout, because I knew that if we broke above here, some shorts would get squeezed. And I was lucky enough to be a part of that, and then we had that squeeze. So, I'm hoping for more on these positions, but definitely right now, I'm profitable on a lot of them. And then Starbucks is another one. So we had this pattern on Starbucks where I saw this inside bar doji, and we dropped the next week. And it's the same concept that I keep playing is, okay, if we break these wicks here, I'm hoping for a short squeeze. And then that's what I did, and that's where I am right now. So I'm up on that as well. I'm up on quite a few of them, and I shared it already. Tesla, same pattern there. Disney. So Disney is one that I have been calling out for a long time, telling you guys that, as long as this bar holds on Disney, I expect it to continue to just make higher highs. So we had a nice double inside pattern on Disney, and I just took the break to the upside, so I'm up a bit on those. So hopefully next week we get some bullish continuation, and I can take advantage of those swings. But I also do have two shorts on. Canada Goose is a short that I really like. We had this double inside bar pattern on the weekly, and I took the break below these wicks here, hoping for a flush. So we did get a flush, but there is some buyers still. So I'm going to see how this one plays out. And I'm probably going to move my stop loss down to here so that I'm going to lose very minimal if it turns around on me. But hoping for more on this one. And then Best Buy. So Best Buy, I went long last week. Same concept, had that inside bar set up here. I went long on the break, and then immediately it turned around and stopped me out. So that pattern is what I call the inside bar fake out pattern. So you could obviously see there was a lot of trap bulls up here, and I was one of them. So I'm actually flipped right now, short. So I'm shorting right here. My stop is up here. So we're gonna see if I can get some more follow through. And I'm only risking about $100 on each one of these swings because I'm taking so many of them. So if this comes down back to here, I'll make $200, right? So I keep it simple. I have good risk to reward on these trades, and I don't need a lot of them to work in order to make money because my risk to reward is good. All right. So let's get to the chart request. And please post any other requests that you guys have. Just post it in the chat, and then I'll go through them. So let's look at NUGT or any other questions that you guys have. Let me know. So NUGT, this is gold, right? So I actually covered gold in the Zoom webinar I did today on the reversal. So let's look at the gold futures, right? So when you're trading these ETFs that are leveraged, they're based mostly on the actual futures, right? Because it's just a derivative of that, right? So what I was pointing out in the Zoom webinar today, or also on the YouTube video that I did, was we had this pattern in gold where if we look at this closely, gold is in an uptrend, right? We can see that's an uptrend. But we had this wave of shorts that were in the market, and the shorts have traded now to an extension. So if we take the Fibonacci, we had this push down, we had this push back up to the 50, and then we had this trade to the 272 area, and then we found the reversal. So there was a lot of shorts that were in this cluster that they have covered their position, and that's why we're getting this rally. So now we're coming back into this zone up here where we had that big rejection. So I'd be a little bit careful to see if we get back up here and we roll over one more time, because any short players or algorithms that shorted up here, they're going to short again, because why wouldn't they, right? If they made a lot of money once, they're going to try it again. Okay, so kind of have to just wait and see. And the leverage ETFs are a little bit harder to time because they follow the futures, but not to an exact science. So, and the other thing with the leverage ETF, so I used to do JNUG actually for gold. So JNUG is like the junior gold miners 3 times. I made a lot of money on that back in the past, but I gave up trading these leverage ETFs because there's a lot of manipulation with them. So I rather trade the futures contracts, and I encourage you guys to look into the futures contracts because there's more ways to control your risk. Look at these type of candles, right? These are very manipulated, and look at these wicks, for example. So it's difficult to consistently make money in leverage ETFs. That's what I'm going to say. All right, so be careful with those, and I don't want you guys to lose your money trading that. All right, so FSLR, see what's going on with that. Right, look at that, nice inside week, beautiful. So this is a typical pattern that I'll trade here. So inside week, you can bracket this candle, you can short below the low, or you can go long above the high. Personally, for me, because this stock, it's not like tech, right? If tech is at all-time highs, so I'm really just want to go long. But look at this stock; it's actually coming back to this previous level of resistance, support. Sorry, and now that support is going to act as resistance, right? So we're back in this right over here. So you have to be very, very cautious here. But I think it's a good setup to just bracket the candle. So if it breaks it upside, go long. If it breaks it downside, go short. I love inside weeks because they're pauses in the market, and then they usually have follow through, right? If we look at this chart in the past, we have a pause here, we have a push through, we have a pause here, we have a push down, we have a pause here, reversal, pause here, big push up. So that's what we're looking for. All right, SSTK, another inside week. These are great setups. Look at that, right? So here we go. We have a nice inside week. And let's see, is this stock an uptrend? So this stock is up against resistance as well. So same type of play. You want to bracket this and see what it gives. You know, recently it's a little bit sketchy over here because we can see that these inside bars have been being chopped around, but eventually it's going to break out. So this might be the bar that decides to push in either the up or the upwards or downward direction. So I would bracket that for a shot there. Starbucks. So I'm in Starbucks, like I said. And the setup that I took was based on this inside bar, and I'm just writing this one for now. So I think it looks good. Like if you notice with Starbucks, there's no resistance above. I like when the stocks don't have resistance above, because then if I feel like there is no limit to where it can go. But if there is a resistance, then you always have to be worried that, okay, if it comes back to that resistance, is it going to double top? Is it going to reverse? Right? Hog. Inside week. This person, who's this person? Good man. Finding all the inside weeks. Good setups. I love inside weeks. Let's just look at the last few, right? We had this inside week pop, inside week pop, inside week down, right? But you see the point is that they're giving you movement. That's what we want. We want movement as traders, right? So even if half of these work and you have a good risk reward, 2-to-1 risk reward, you're going to make money, right? So same thing here. If we look at this, this is a stock that is, you see how the difference between this and Starbucks is Starbucks, there's no resistance above. These stocks have resistance above. So it's hard to pick the direction. So what I recommend is just bracketing. Okay. So for example, if you bracketed this previous inside bar, you would have got filled on the short side. You would have already made 2 times your risk. Right? Do you guys understand that? Let me know if you guys understand what I'm talking about there. So I'm gonna try to draw it for you guys. So you take the short tool, short over there, stop loss up here, right? That's all you gotta do. So you have an order to buy stop limit, sell stop limit. So whichever one fills, the other side gets canceled. So this one you would have been filled short, and then you would have hit your targets down here. That's more than 2 times your risk. Okay. Very, very simple stuff. I do not trade anything complicated. You don't see any waves on my thing. I can't quantify that for you guys, right? Like I don't draw, waves and circles and all those type of stuff, because how do you trade that over time with it being simple, right? If I tell you bracket an inside bar, you can do that. Anybody can do that. So that's why I trade the way that I trade, because it's very simple. Anybody can do it. And simplicity is what makes money. Okay. All right. So let's continue. SONM. SONM. Okay. So this one's in a downtrend, right? So we can see that. And it looks like it's right up against a fib. Which fib do you guys think that is? Let's see who can get it right. I think that is 50. Let's see. No, close. So we're pressing up against these fibs. So nice try, Daniel. I was thinking the same thing too. But that's how I would play this, because we had this big sell-off, a big sell-off. You see how aggressive this sell-off is? So when we have an aggressive move, you better expect that there's going to be shorts that are going to be looking to play that move again. And usually they're going to look for the fibs, right? You can see here that they tried the 20 EMA. This is the mid-Bollinger Band. And now we're pushing up. So I wouldn't be surprised if we get back into this zone, and that's where we have that drop. Let's look at the last cycle down and see how that played out. So let's zoom in like this. So let's start from the peak before the selling, and then let's bring it to the bottom of the selling. So it's a little bit distorted here, but yeah, so we had these are algos sitting at these levels, right? That's why you see these wicks, boom, boom, boom. They're just limit orders sitting here, short, 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 short. That's why you see those wicks. To be honest, this stock looks very highly manipulated. Anytime I see these type of wicks on the weekly chart, it makes me sick, because I know that somebody's getting destroyed. So I wouldn't play it, but there's the analysis in case you do. Just keep your risk small in those type of trades. Zoom. Let's see what's going on with Zoom. So let's go to daily. So I gave a setup on Zoom, and it hit targets. So we got about 2.6 on Zoom, and then it rolled over, right? So this is very important, right? I want to show you guys this, because if you don't take your profits, look what happens to you. Okay, so when we played Zoom, there was a total of 3 trades. This inside bar was a winner, this inside bar was a loser, this inside bar was a winner. But what happens if you think that you shouldn't take profits and you hold on to position? This happens. So this is a lesson to anyone that does not want to take profits. Take your profits. You can make easily 2 times your risk on this trade and be done with it. That's what we need as traders. We want to come in, you risk 1,000, you make 2,000. You risk 500, you make 1,000. You risk 100, you make 200, and you're done. Do not get married to these trades. Move on. Look at all the setups that I have here. Look how much. Why would I want to waste my time? Okay. There was actually a nice inside bar short here. This one is a beautiful setup. I didn't take it. I'm not going to short Zoom. I wouldn't do it. For me, personal preference. I have so much other stocks that I would rather play than to short Zoom. So, but here was a very good setup. Nice. I wish someone called this one out for me. Actually, there's so many stocks that I look at. Sometimes I miss these, but this was a great setup right here. Boom. Nice short here. Let's see. Sitting about 1.7, and it looks like there's at least a little bit more left on the plate to come lower. So let's look at the weekly chart for the bigger picture setup. So, this is why I always tell you guys about the mid Bollinger Band. The mid Bollinger Band is the 20 exponential moving average. It's a very powerful tool on the weekly chart. Usually it acts as support. And we can see here it clearly acted as support. But as soon as we break through, we get a stop loss flush. And that's exactly what we have right now. So the mid Bollinger Band is very important to have on your chart on the higher time frames. So now let's see if we take a Fibonacci. Let's take it from this swing low here, and let's see where we're at. Okay, so this pivot is what I'm going to use, and the reason why is because I can clearly see that there was algo sitting on the 618 here. So they bought, and now they bought, and it's flipping over here. So the next level of support is the 786 and the 886. So it's a good idea if you want to try long, you try long in this area with the stop loss below the swing low and see how that goes. So that's kind of the setup there. If we break through here, this chart will be outside of the Bollinger Band. And in that case, you kind of have to wait for a confirmation candle in order to turn to the upside. All right, so that's soon. RKT, rocket companies. So I look at this chart, I see a mess. Not interested on anything here. There's no inside bars, there's no patterns. It's just this box. So until we get outside of this box, there's nothing to do. There's way better opportunities to risk your capital. Pins. So looking at this, let's zoom out. So this has been on a massive uptrend, right? So it looks like it's taking some steam off finally. So like I said, the first level that I'm looking for is the mid Bollinger Band. So it looks like we're gonna pull back, maybe consolidate a few weeks and let this mid Bollinger Band pull in a little bit more to act as support. So that would be a nice opportunity to go long once this can catch up. I wouldn't want to be long up here because the support is all the way down here, right? So LGBW. Inside week, I like this one. I really, really like this one. Okay, so let's do analysis of this together. Okay, so we had this big breakout bar, and then we had two double inside bar patterns, and that became a actual flag pattern like this. Okay, so the last time we had a double inside bar pattern, we had a resting bar, and then we had a breakout. Boom, right? So this is showing me that it's respecting the inside bars. This was a very good setup. And now it's possible we can have another leg up. So we do the same thing here. So we're going to be looking to take the long of the break of this bar. And the reason I like this bar too is because it's a bear bar. So if we can break this bar, we should squeeze. Okay, I don't know how much, but we should have some type of push up. So looking for this bar to break to the upside because of this big bull bar here. Okay. Alternatively, we can take the Fibonacci of this bar, and you can be buying on any of these fibs with a stop loss below this bar. Keep it very simple. How low time frame do you stop using Bollinger Bands? Yeah, Bollinger Bands for me are only used on the daily and the weekly chart. I don't use it for day trading. It doesn't have an edge in day trading, but it does provide a lot of useful information on the higher time frames. Good question. IBOV. So this one is coming up to this major double top area. We had the inside bar from last week, and that's playing out right now. So I want to see what's going to happen. Is this inside bar going to continue to push up, or are we going to break below this inside bar? If we break back below, then we'll be looking for the mid Bollinger Band. But look at the last time we had a nice inside bar. What happened? We had this nice, beautiful inside bar, and we had a nice rally. So we'll be looking to see if this bar can continue to rally this stock or this index. PLTR and HD. PLTR. So we looked at this one last time. We had that flag, and I didn't touch this. So this is how it was since the last time we drew it. So again, so we had the flag, and with the flag, it looks like we're breaking to the downside. So the only issue with that is that this thing is in a big bull run. So I'll be careful shorting here. Instead, let's draw the Fibonacci of the whole move. Okay, so if this breakdown continues, look for this 50 and the 618 to be support. All right. So I think we had a chart requesting here. FSLY, did we look at that? FSLY? No. So yeah. So we talked about this last week, and you can see the analysis that I had last week was we're up against a 618 short, and look what happened this week. We had the continuation, right? So very like we pointed out last week, we're up on the 618, and exactly the shorts did exactly what we thought they were going to do. They followed through. So right now we have to see, is this going to hold for the bulls, or are the shorts going to take this momentum from the 618 and make a new low? If they break through and make a new low, look for this 272 extension for it to be a reversal. So we'll be keeping an eye on this one throughout next week. And what else do we have here? MARA. So right now, not really. But look at this, it's in a downtrend. So I'm not interested in going long up here because of the fact that this stock was in a downtrend. But I actually think it looks like a decent short, I would say, if any one of these lows can break, and just put a stop loss up here, see if we can pull back to the mid-Bollinger Band. But I definitely don't want to be a buyer up here. Okay. So the last thing that I'm going to do, HYLN, the last thing I'm going to do after this is I'm going to look at the current setups that I have, and then we're going to take it from there. So this was a nasty sell-off, but we have Fibonacci support below. Let's take it from the low, and you can see that we already tagged that 886, right? We tagged the 886. That's why I have the 886 here. We tagged the 886, and there are some buyers, but you know, if they don't start turning it around here, it's going to get ugly. So it's actually a decent risk to reward area to try along with the stop loss below here. Put a little bit of money in and see if this could be a turning point. Because anytime we come back down to 886, it's always a good risk reward to try to take this play with the stop loss below this low. So if we can break back above these bars, you can try long here with a stop below here. Okay. All right. So the current the setups for this week that I have are Adobe. So Adobe showed up on my scanner. We had a nice inside week, and we had a breakout of this pennant pattern. So I have an order to fill me if we can break 505.59 and a stop loss right below here. So looking for a nice squeeze in Adobe, see if that can happen. Walmart is actually my top pick, and I should post this. Well, I did post this. I really like Walmart because we have a lot of confluence. We're in this channel. We're near the bottom of the channel. We're at the mid-Bollinger Band. We're hugging it, and we have an inside bar. So Walmart is a textbook, beautiful pattern. It doesn't have to work, but I like it. I really think it's a good setup. And we had 1, 2, 3, 4 red weeks. So just by the law of colors, so like the last time, look, whenever we have a significant amount of one color, we usually have a reversal. So hopefully we have a green week next week. So I'm looking for entry at 145.71, stop down here, hoping that we can get that push up in Walmart. AT&T, actually thinking about this for short. I don't have an order. I'm just going to sit and watch it because this thing is in a downtrend, and we had 2 weeks of big bulls accumulating some shares. You can see buying. I'm actually thinking here, if we break through here, that there's going to be a nice flush and retesting the support. Uber, inside week again. Uber has been on a little bit of a tear, and I like this bar because there's a lot of shorts in this bar. So I'm looking to see if we can break above this high to trap some of these shorts that are here, and here, and have a nice squeeze. GameStop, inside bar. So this one, I'm looking more toward bracketing the bar and seeing what happens because it is in a downtrend. If we look at it over here, but it's been on this crazy run. It's gone from like $2.50 up to like $22.50. So let's see what we get with there. And then the last one I have is Accenture. So the reason I have Accenture is because there's a double inside bar pattern. So I'm really looking, I like double inside bars. It's just 2 weeks of straight consolidation. So at some point there's going to have to be a breakout. So looking here to see if we can break above this double inside bar and continue higher. So those are the setups I have on for next week on my watch list. I have 12 open positions from last week in terms of swings, and like 10 of them are profitable. Some are break even, like some are close to 2 or 3 are. So I'm going to be looking to get rid of some next week as long as they hit targets, and then eventually moving my stops up and giving myself some protection. Okay, so that's it. Thanks for joining me today. And we got through all the requests. I appreciate you guys' time on a Sunday. So let's start 2021 the right way. Remember what I said. There's going to be a lot of trades in the year. If you're a day trader and a swing trader, there's going to be a lot of trades in the year. So make sure you treat trades like what they are. Trades are gambling in terms of the sense that it's just, you don't know if it's going to work. That's why it's a gamble. But it's a probability-based gamble, right? It's very, very similar to poker. You have pocket kings, you have good odds of winning, but you don't know if it's going to work. You can still get screwed over, right? So keep that in your mind. That's what trading really comes down to. If you got pocket aces, like Walmart for me is a pocket aces setup, but it doesn't mean it has to work, right? So that's the most important thing, is don't get attached to the outcome. If it doesn't work, we just move on. There's going to be a lot of trades in the year. So hope that gives you guys some motivation, and wishing you guys all the best, and let's make some money tomorrow. All right, take care, guys.